Canada's real estate market in Toronto is under serious pressure right now. Sales are dropping fast, inventory is piling up, and many people who bought homes in recent years are starting to feel the strain. If you live here or care about what happens next, this matters a lot. For those of you watching this all the way through, stick around. You're about to hear the trends that could hit hard, and understanding them could make a big difference. Home sales in the Greater Toronto Area have taken a big hit. In October 2025, there were about 6,138 home sales recorded, nearly 10% fewer than a year earlier. At the same time, the number of homes for sale is climbing. According to a recent market report, around 27,808 homes were listed and active at that time, a very large increase from previous years. That growing supply is putting downward pressure on prices. The average selling price in the GTA is now just over $1,054,372, a drop of roughly 7% from the previous year. For detached homes, the average price fell to about $1,360,000, down more than 7% as well. Why is this happening? One reason is that more people are putting their homes on the market, but fewer buyers are jumping in, or at least fewer paying peak prices. Mortgage rates are still high compared to recent years, and many people are concerned about their ability to afford payments if they renew or restructure. Sellers feel more pressure, and the balance tips. If you bought a home back in 2021 or 2022, your situation could be pretty stressful. Imagine renewing your mortgage at a higher rate, just as your home's value has dropped. Higher payments plus a market that's less forgiving could squeeze your cash flow. It's a serious risk, especially if you were counting on high resale value. The condo market is especially shaky. New condominium sales in the city of Toronto in September 2025 dropped to just 53 units, extremely low compared to long-term averages. Across the entire Greater Toronto Area that same month, only about 155 new condos sold, a big drop that reveals weak demand from investors or first-time buyers. Part of that comes from investor pullback. Many investors pre-construction condos expecting to flip or rent them out. But with so much supply now, cash flow is harder to maintain and resale risk is real. Buyers who once saw condos as an easy investment may now think twice. When a market slows like this, it hits people who own property hard. Some homeowners may choose to hold off on listing, hoping things turn around. Others might try to renegotiate or refinance their mortgages. And for some, selling may feel less attractive because accepting a lower offer could mean a real loss. On the economic side, there's worry about how mortgage renewals will play out in this environment. Rising costs, interest rate risk, and debt loads are creating a fragile situation for many homeowners. If jobs weaken or inflation spikes again, stress on household finances could worsen. It's not just about housing prices, it's about survival for some. So what should you do if you live here and want to protect yourself? First, get familiar with your mortgage renewal date. Know what rate you'll likely pay and whether your current payment makes sense under a renewal scenario. Second, check how many homes are listed in your area and how long they're staying for sale. If homes are piling up, it's not just a momentary slump. Talk to a mortgage broker or financial advisor to explore long-term options. Refinancing, longer amortizations, or strategies for lowering risk. Here are a couple of major, real-world examples people are watching right now, not just theory. First, TRREB data from November 2025, reported by multiple outlets, shows that in October, GTA home sales dropped by 9.5% compared to a year ago, to about 6,138 transactions. At the same time, new listings climbed to 16,069, and active inventory surged past 27,800 units. A huge jump compared to last year. What this is telling us is simple. Even though more homes are up for sale, many buyers are still backing away. Some are cautious because they're not sure they can hold on to what they buy, especially if rates go up again or if their job situation changes. Another example, despite all that inventory, buyer sentiment isn't completely dead, but it's fragile. According to a Globe Newswire press release from TRREB, many of the buyers who are active right now are those who feel confident about their job security and their long-term ability to make mortgage payments. But for a big chunk of potential buyers, economic uncertainty is too big to ignore. TREB's president noted that even though there are more affordable homes compared to the boom years, many people are still holding off because they don't know what the economy or their own finances will look like 6 months or a year from now. To put a fine point on how deep the change is, according to a local real estate analytics firm, the sales to new listings ratio for October was just 38%. That's a very buyer-friendly number, and it strongly suggests that we are not in a seller's market anymore, at least not in the GTA as a whole. For regular people, this means more negotiating power right now, but it also means that for sellers who bought in recent years expecting exponential gains, things may not play out the way they hoped. Staying informed is your best defense, and right now, staying sharp means paying attention to real signals, not just gut feelings. For example, in October 2025, the GTA saw 16,069 new listings and 27,808 active listings, according to TRREB data reported by Global News. That surge in supply is not just more homes for sale. It's a sign that sellers are losing confidence, and buyers now have far more choice than they did in the boom years. At the same time, sales dropped significantly. That same TRREB report reveals about 6,138 homes sold in October, which is 9.5% lower than a year ago, a pretty sharp slowdown. This decline, combined with rising inventory, is putting real downward pressure on pricing. Exactly the kind of shift that gives long-term buyers leverage, but makes it much harder for sellers expecting big gains. On the pricing front, according to SaveMax, the average selling price in the GTA is now around $1,054,000, a drop of more than 7% year over year. That's not a minor correction. For many people, that's serious money. It means whether you bought in 2021 or 2022, you need to rethink how you're going to carry your mortgage when it's up for renewal. What's more, RateHub is highlighting how the market is tilting toward buyers, calling October buyer-friendly. That's backed up by TREB's own data. The ease of negotiation, longer listing times, and extra inventory all point to a reset, not just in sentiment, but in power. There's also a deeper worry. Mortgage strain is growing again. According to reports shared by local real estate observers, power of sale listings in the GTA are rising. That means more homes are ending up in lender-driven sale processes. A very serious risk for homeowners who over-leveraged or locked in low mortgage rates during the pandemic. Putting all this together, what can you do? First, don't assume everything will stabilize quickly. Reassessment matters. Check your renewal date, do the math on your payments, and run worst-case scenarios. Talk to a mortgage broker or financial planner about what happens if rates spike or your equity is squeezed. It may seem like I'm being repetitive, but I can't stress these things enough. They are really important to people that are currently or are going to be caught up in this madness soon. Second, if you're planning to list, think strategically. This is not the peak frenzy market. You may need to price more competitively, negotiate harder, or even consider a power of sale specialist approach. Third, for buyers, this could be an opportunity window. More supply, motivated sellers, and less aggressive competition, but only if you negotiate smart, inspect carefully, and don't over-leverage. At the end of the day, moving isn't always the answer, but awareness is. If you stay plugged into key markets, track active listings, and follow how rates and economic indicators change, you'll be positioned to make smarter decisions. The housing market is shifting, and for many people, the decisions you make now could matter for years. If you found this video helpful, subscribe for more. There's way more ahead on Canada's housing markets, where risk is real and what you need to watch for. Until next time on Maple Leaf Insider, Thanks so much for watching, and stay sharp out there.